AI stocks are hot, but are they too hot? I'm not going to necessarily call this a bubble because I'm not trying to sound dramatic or anything. We're seeing a lot of major investment firms, analysts with decades of experience, and some of the smartest money in the world saying that something isn't adding up. There is a gap that is widening between AI stock prices and the company's actual financial health. And on top of all that, retail traders, everyday investors are rushing into AI ETFs like it's the next gold rush. We're going to break it down with actual facts, sources that you can find in the description, okay? But I want you to be thinking about trading and investing into AI. The first thing to understand is why AI exploded as fast as it did. In 2025, if you're a fund manager, there is no way that you're going to outperform other people if you don't have AI stocks in your fund. Your peers are going to outperform you, your benchmark's going to be outperformed, and your investors are going to start asking questions. They're going to be like,
oh, what's going on? Why are these people making more money over here whenever da-da-da-da-da?
So this created a huge wave of buying AI stocks. Not necessarily because everyone believed in the evaluations, but it's because if they didn't buy the stocks, they would be fired because the performance is dependent upon their job. In early 2025, GMO, the firm led by legendary bubble analyst Jeremy Grantham, publicly said that the AI rally was probably a bubble. I'm not here to say that's true or false. I'm just saying what he publicly said. And this isn't just some random dude on Twitter or Reddit. This is a person who has called previous bubbles in the past. The reason why that AI stocks are being bid up so fast is because the demand is real, but we're talking about expectations of what people think will be in the future with AI's relationship to the stock market. The problem really isn't the demand, it's the valuation. According to a late 2025 analyst from Reuters, the tech sector now makes up roughly 31% of the S&P 500 market cap, while its share of earnings has actually fallen. Now that right there is another example of the gap. That is a disconnect. That should not be the case. When price rises faster than profit, you aren't talking about fundamentals, you're talking about expectations. People think that AI is the future, so they're buying it. That's why it's going up. We're going to take NVIDIA, for example. They are the face of the AI boom. And depending on the period you're looking at, it's been trading 20 to 40 times revenue, not earnings, revenue. For a company that size, that multiple is actually insane. This means that investors expect NVIDIA to keep growing at a massive pace for years. If there's a slip in demand, if the competition catches up, if there's supply chain issues, basically it needs perfection. Nothing can go wrong. It has to be perfect. The US economy is going all in on AI. If we can tell that. If AI fails, we're cooked, okay? If we look at stock market history, retail piling in has been one of the oldest signs of a warning. You need to take a step back and see what you're actually doing. Okay, we're going to look at the other example. This video isn't just about dooming, okay? It's not about doom maxing. The bull case for AI is strong. It's really real. I mean, I 100% believe in AI. I think AI is the future. AI is not Dogecoin. It's not pets.com. It's not Web3. It's technology that is already reshaping what we are seeing on a daily basis. If we look at Sora 2, if we look at where AI started 2 years ago to where it's at now, the actual technology advancement of AI is crazy. We had Elon Musk talking about AI like 3 years ago and warning everybody.
There will come a point where no job is needed. You can have a job if you want to have a job for sort of personal satisfaction, but the AI will be able to do everything.
It's taken over the software industry, healthcare, finance, you name it. AI is being used as a part of the world. There is a lot of computing power now that is going into the world. The chip makers can't even keep up with the demand. The data centers are expecting this at a rate that we've never, ever seen before in tech history. Cloud providers like AWS, Microsoft, Google, they are all dumping billions of dollars into the AI boom. If we take a look at the bull case, valuations do look expensive, but maybe they deserve to be expensive because if AI becomes the foundation of electricity, the market might not be crazy, it might be early. So people are going all in, like I said, on AI because this could or could not be the next boom. But the bull case only will hold if execution matches expectation. Everything has to be perfect. If things get shaky, nah. Market crash. Every trader and investor that is watching this right now needs to learn how to separate real AI companies from narrative-driven AI companies. Real AI companies have revenue. They have enterprise clients. They have reoccurring revenue. They are shipping actual AI tools. Well, there's probably so many scams going on right now in the AI world, bro. Narrative AI companies, they talk about potential future projects. They press release instead of earning money. It's just all press releases is not like earning money releases. They have no competitive advantage and they rely heavily on us retail traders for volume. Do your research. Look into these companies before you decide to invest into them. If you want a simple test, look at the earnings report, bro. In late 2025, even during AI's peak enthusiasm, companies like AIC missed the revenue target. Now you're going to ask yourself, why does that even matter? Because misses like that at the edges of the hype cycle are how cracks start to form, how you don't get a solid foundation, and how everything crashes. It is like an implosion, not an explosion. It's boom. Let's talk about some rules that you should probably keep in mind going into trading AI, okay? Don't chase anything. Wait. Risk money you're willing to lose. I'm not a financial advisor, but I'm for sure not going to risk any money that I'm not willing to lose, because if I don't do that, I'll just be emotional. You don't want to be emotional. You don't want to put your last $1,000 into the market, okay? Pay attention to earnings, pay attention to business reports. If something is too good to be true, it probably is. Don't gamble. Focus on the infrastructure. That is where the real money is flowing. Chips, data centers, cloud computing, networking, cooling, all those things that have to do with AI and even computers. There's a bunch of information for free that you can find on the internet to help you pick whatever you think is the best, because there definitely doesn't need to be any guessing. The most important part of this whole video is that the biggest risk for AI stocks isn't a catastrophic crash. It's disappointment. If America is going all in on AI and there's some sort of disappointment, that is what will cause the crash. That is why people are saying there's a bubble, because the numbers aren't adding up. The market is going up based off expectation. Fund managers are already talking about AI indigestion. The idea that companies are spending so aggressively on AI that if it slows just a little bit, investors will panic. There is no question in my mind that AI will definitely rock the industry. It will create new jobs. It will create new companies, new markets. It will probably benefit certain software, certain companies, certain tech. It will probably benefit a lot of things. Also, it will take away a lot of things, because I've seen a lot of videos on even Instagram, YouTube of like people making AI robots and replacing chefs. It's going to keep getting better. This doesn't mean that you shouldn't buy something because everyone is talking about it. You just need to do your own research to understand that expectations are built into price. It's built into the pie. Trade the cycle. Don't trade the hype. Stay grounded in what matters, the numbers. The numbers will actually tell you something. Mathematically, numbers will help you in this type of field if you wanted to choose to get into it. Because revolutions in general don't come with guaranteed profit. There's always someone that loses. Smart decisions will give you an edge. That is what you need, a mathematical edge. Thank you for watching the video today. I hope you all enjoyed the video. Please leave a like if you liked the video. If you disliked the video, dislike the video. Leave a comment on what you think, if this is an AI stock bubble or if it's the future. Tell me what you think in the comments. Monday through Friday, we stream at 9:15 a.m. Eastern, the New York Open. Code ADX will get you the best discount. Hope you all have a great day. I'll see you on stream.